Ladies and gentlemen, good day and welcome to 3Q and 9-month FY2024 earnings conference call of Welspun Corp Limited, hosted by Batlivala and Karani Security India Private Limited. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shailesh Raja from Batlivala and Karani Securities India Private Limited. Thank you and over to you, sir.
Yeah, thanks, Muskan. Well, good morning and thanks to everyone who has logged in to Welspun Corp 3Q FY24 earnings conference call. I would first like to thank the management for giving us this opportunity to host this call. Without taking much time, I hand over the call to Mr. Salil Baba. He's the head IR, Welspun Group. Over to you, sir.
Thank you very much, Shailesh, and good morning to all of you. I welcome all of you to the Q3 and 9-month FY24 earnings call of Welspun Corp Limited. Present along with me today on this forum is Mr. Percy Birdy, Chief Financial Officer of Welspun Corp Limited. I am also joined by Gautam Chakrabarti, who leads Investor Relations for Welspun Corp. You must have received the results and the investor presentation of the company, which are available on the stock exchanges as well as on the company's website. We'll follow the normal routine. We'll start with the opening remarks and update from the leadership team. And then we will open the floor for your questions. During the discussion, we may be making references to the presentation which has been shared already. Please do take a moment to review the safe harbor statement in our presentation. Should you have any queries that remain unanswered after this earnings call, you can reach out to us. With that, let me hand over the floor to Percy from Welspun Corp. Over to you, Percy.
Good morning, everyone. Welcome to our December quarter and 9-month FY24 earnings conference call. I would now start the discussion with some of the key operational and financial highlights for this current quarter, and we'll follow it up with a business update, and after that we will have an interactive Q&A session. Strong performance was witnessed in this December quarter on the back of excellent ramp-up in our new businesses. On the financials front, our consolidated revenues from operations for December quarter and 9 months stood at INR 4,750 crore rupees, up by 98% YOY, and INR 12,878 crore rupees, up by 126% YOY, respectively. EBITDA for the current quarter grew by 170%, and for the 9 months by 332%. So EBITDA stood at 471 crores for this quarter and cumulatively at 1,391 crores. Profit after tax for this quarter, it jumped by more than 10x to rupees 292 crore, while for 9 months, profit after tax was at 842 crore. Net debt stood at about 500 crores at the end of December, compared with 1,800 crores at the end of last year, same period, driven by our very strong free cash flows from the businesses. ROC stood at 15.7%. This is for a 9-month period, compared with the last year's ROC for March 23 at 7.9%. On the pipe solutions vertical, that is India and US line pipes, DI pipes, SS pipes and tubes, our sales volumes for the line pipe business in India and the USA for the 9 months ending December rose by 65% YOY. Order book for the line pipes in India and US stands at a robust 575,000 tons, valued at more than 7,000 crore rupees. Our associate company, Epic, in Saudi Arabia, has a confirmed order book exceeding 2 years. They have also recently started the execution of a large Aramco order of 1.8 billion riyals. In the India DI pipes, there is a steady improvement that we are witnessing. For 9 months ending December 23, the sales volume rose by 10x year over year to 135,000 tons. In WSSL, the stainless steel bar sales volume, it increased by 200% YOY to 12,294 metric tons, while the pipes and tube sales volume rose by 23% YOY to about 3,667 metric tons during the 9 months ending December. In the building materials vertical, where we include Syntex and TMT, the water storage tank sales volumes in Syntex grew by 11% YOY to 10,000 metric tons, while the TMT rebars sales volume for the 9 months December stood at 79,000 tons. Syntex has already announced its foray in the plastic pipes segment, and the portfolio will include different types of PVC pipes, including CPVC, HDPE, UPVC, OPVC. On the ESG front, your company continues to be one of the best in this category. We achieved highest rating in ESG performance by CRISIL ESG ratings among the industrial and metal, ferrous, non-ferrous companies. Moving towards sustainability goal by focusing on improving the energy intensity, water intensity, and waste intensity. Tax transparency report has also been published by us. Now let me give you some key updates on the pipe solutions as well as the building materials businesses. We begin with line pipes. For the quarter, the line pipe sales volumes in India and US operations stood at 291,000 tons against 163,000 tons in the corresponding quarter of the previous year, which is a YOY growth of 78%. For 9 months, the volumes rose by 65% YOY. Contrary to the IEA's expectations for a slower oil demand growth of 1.2 million barrels per day for 2024, OPEC continues to maintain a strong outlook and expects the demand to grow by 2.2 million barrels per day to a total of 104.4 million barrels per day. As far as gas is concerned, the IEA expected natural gas markets to return to growth in 2024. The forecast gas demand is to grow by 2.5% in 2024, and LNG supply is likely to grow at 3.5%. On the key drivers and outlook in India, introduction of a unified tariff policy aiming at creating more stable, competitive, and transparent pricing regime, which will be beneficial to both the demand and the supply of gas. There is a policy focus on potential development of gas storage facilities by the central government, which is going to have a very positive impact on demand. According to Petroleum Planning and Analysis Cell, following a 7% YOY decline in 2022, India's primary gas supply rose by 5% YOY in 2023. The outlook in India is that natural gas demand is expected to increase by 6% in 2024, mainly supported by higher gas use in industry and in the power sector, amid the development of national pipeline grid and further penetration of city gas infrastructure. Water transportation for irrigation projects through the line pipes is also likely to grow steadily, with continuous focus by central as well as the state governments. And export market continues to remain a focus area for us, as the outlook is very bullish in Middle East, Australia, Southeast Asia, etc. And Welspun Corp has been successful in booking orders in all these geographies. India's order book remains strong at the end of December at 369,000 tons. Then we move over to USA. In 2023, US moved to take the prime place for the first time, exporting 116 billion cubic meters of LNG, surpassing both Australia and Qatar. US LNG accounted for more than 15% of Europe's natural gas demand in 2023. Global gas supplies in 2023 remained tight as the increase in global LNG production was not sufficient, and US has accounted now for 80% of the incremental LNG supply. LNG contracting continues to experience very strong momentum in 2023, and now US accounts for 34% of all these contracted volumes. The outlook in US remains very positive, as the natural gas production is likely to grow by 2% to 1081 billion cubic meters in 2024. We see strong demand for our spiral pipes continuing in the US market. Total order book remains at about 206,000 tons at the end of December. We are also confident of booking new orders to ensure continuity of the business. Then we move to our Saudi Arabia, our associate company, East Pipes. In Saudi, the focus on Vision 2030 by the Saudi government continues to be the key driver. The country is likely to increase oil exports gradually and use more gas for its own energy requirement. The water infrastructure market also is very strong in Saudi, and their Vision 2030 has been investing heavily on improving the water infrastructure. The Ministry of Environment, Water and Agriculture announced some time back an allocation of $80 billion towards water projects in the coming years, and expects 90% of water demand to be met through desalinated water by 2030. All this augurs very well for our associate company in Saudi. EPIC is very strongly placed to capitalize on all these opportunities that are continuing to emerge in the KSA market. EPIC is also focusing on strengthening its financial positioning whilst boosting the resilience of the business and ultimately delivering tangible long-term value to the shareholders and various stakeholder groups. EPIC's well-established track record in the market, a very strong brand name, and solid competitive advantages have resulted in signing of a number of new contracts, including a significant SAR 1 billion, which is approximately 2,200 crore rupees, contract awarded recently by SWCC. With this, in November and December, major cumulative orders received by EPIC stood at value of more than 4,000 crore rupees. Now we move over to DI pipes. Volume ramp-up continues in the DI pipe segment with a 36% sequential growth. 9-month FY24 volume recorded at 135,000 tons. We have a strong order backlog of 264,000 tons valued at rupees 2,185 crores. Our order book position has been built in a short period, and starting commercial production, that itself is a testimony to our capabilities and our credibility. Our brownfield expansion at Anjar has been progressing very well and is expected to contribute to the volume in FY26. With a strong growth potential in the MENA region, Welspun Corp has announced setting up of 150,000 tons per annum DI facility in the Middle East with an investment of approximately 500 crore rupees, and we expect this to be operational in H1 of calendar 2025. The DI market outlook remains very strong. In the interim budget also, the Department of Drinking Water and Sanitation has allocated 77,000 crore rupees. Out of this, the Jal Jeevan Mission gets the highest allocation of 69,926 crore, which clearly shows the government's intention to maintain this as a key focus area. For Welspun Corp, clearly, DI pipe segment will continue to remain as a key focus area in the foreseeable future. Then we move to stainless steel business, which is under WSSL, Welspun Specialty Solutions Limited. WSSL continues to post a steady performance as the stainless steel bar sales volume during the 9 months ended December, it rose by 200% YOY to about 12,300 metric tons. Similarly, the stainless steel pipes and tubes sales volume rose by 23% YOY to about 3,700 metric tons. WSSL has successfully developed, produced and delivered ultra-low cobalt stainless steel for application in nuclear power station components. It is also exported for the first time alloy 6625, high nickel and moly alloy seamless tubing for critical application for the first time. We are getting very encouraging product acceptance and feedback from our recently added USA market as well. The current order book stands at about 4,200 metric tons and valued at more than 160 crore rupees. WSS continues its transformational journey under a well-defined growth strategy, and FY24 will become first significant milestone after witnessing the first year with a profitable bottom line. Then we move to the building materials vertical for Welspun Corp. First we take up Syntex. In our existing business, we continue to steadfast on the growth path as we increase focus across our portfolio. We have organized multiple roadshows and stakeholder meets across the country to get a deeper understanding of the retail market and to co-create growth plans with our channel partners. We are going to take it to the next level now with enhanced marketing and branding activities. During the quarter, as per our planned strategy, Syntex finalized its plan to foray into plastic pipes segment through its step-down subsidiary, Syntex Advanced Plastics Limited. The pipes and fittings would include CPVC, UPVC, HDPE, and OPVC pipes and shall cater to the exponentially growing water distribution segment. I'm also happy to share that SAPL has signed the framework agreement with Welspun Pipe Extrusion Technology BV for supply of its high-quality PVC or pipes manufacturing lines exclusively to Syntex in India. With the signing of this agreement, Syntex is set to write a new chapter in the PVC or pipes manufacturing in India with already well-established cutting-edge technology for the PVC products. Foray into plastic pipe segment provides a huge opportunity to Syntex to leverage its brand value, optimize its distribution channel, and rationalize its logistics cost, thereby charting out a strong growth outlook and further strengthening our position into the B2C segment. Then we move to TMT bars. Consistent improvement in production and sales of Welspun Shield TMT bars, with December quarter sales volume recorded at 30,000 tons. Market penetration has been progressing well, with 91% districts now covered in Gujarat and 248 dealers all connected. Our marketing approach through innovative digital channel to address the B2C segment has been paying off very well. In front of ESG initiatives, I think all of us are aware that we are very focused on ESG interventions across all the three areas of environment, social and governance. Also, we rank in the top 7% of the companies in the steel sector globally when it comes to ESG. As a testimony to our hard work, WCL also got a zero waste to landfill certification by TUV Nord India for the Anjar facility. Coming to our net debt cash position, the company's gross debt has declined substantially to 1,858 crore rupees as at the end of December, and compared to March 23, which was 3,300 crore rupees. The company's net debt cash at the end of December stood at 503 crore rupees compared to 1,138 crores at the end of March 23. During the quarter, that is comparing December versus September, our net debt marginally increased, which is due to change in working capital in India. Our guidance numbers given out some quarters ago for the full year FY24, we are well on track not only to achieve them but to actually surpass them. Our revenue YTD December is 12,878 crores versus our full year guidance of 15,000 crores. Our EBITDA for YTD December is 1,391 crores versus our full year guidance of 1,500 crores. And our ROC for YTD December is 15.71% compared with our full year guidance of 16%. With this, I would like to summarize by highlighting that both our business verticals, that is the complete pipe solutions and the building materials, are performing in line with our expectations. We continue to maintain our strong focus on the DI pipes business and Syntex, and we see strong growth opportunities in both the businesses. These two pillars, the DI pipes and Syntex, will be the real growth engines for Welspun Corp in the number of years to come. As mentioned earlier, on the back of a strong demand outlook, we are foraying into Middle East region also to set up DI pipes manufacturing capability. Syntex has already announced its foray in PVC pipes, and we see a huge potential there as well. WSSL also continues to ramp up, and we expect it to continue with a strong focus on quality, market penetration, and execution. And on the ESG side too, our efforts are being recognized and appreciated, and we will continue to remain committed to our ESG goals. With this, we can open the floor for the question and answer session, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while question queue assembles. And the first question is from the line of Miraj from Arihant Capital. Please go ahead.
Thank you for the opportunity, Percy sir. Congratulations on a great set of results. So just to start with a bookkeeping question, sir, if you could let me know the volume split between India and US line pipe business.
Sure. So basically the sales volumes that we have reported, India plus US put together, is about 290,000 tons. And India would be close to about 170 and balance is US.
Understood. Okay. So secondly, we've come up with this announcement of putting up a DI plant in the Saudi unit. Wanted to understand a couple of things over here. For the money that is to be invested, will we be putting any equity up there which would lead to our stake getting increased? And secondly, what would be the asset turn for this? I know that it's still a long way from here, but just to get a brief understanding on that part.
So Miraj, our announcement is referring to Middle East region, not to any particular country. And we are looking at two options and exploring both the options simultaneously. And it will not be through the East Pipes company, the associate company. This is on our own, on Welspun Corp. So we see the DI market in the region as a very strong market and a very growing market, comprising of 4 to 5 large economies in that region. And that is what is driving us to enter that market.
Understood. So I was also looking at the Epic's financials. In Q3 and 9 months, we've done a pretty good set of results over there. But when I look at the cash flow generation, cash flow from operations, it has been negative. In fact, it has increased. If I were to look at for 9 months, it is currently at 488 million riyals negative. So, what would be the reason? Where is the money getting stuck over there? Is it because of larger trade receivables, or what would be the reason for this?
So, Epic is doing phenomenally well. As you can see, that all the P&L numbers, the revenue growth, the bottom line operating margins, all are phenomenal. And even their outlook with a strong order book. So they are booked for more than 2 years. Now, your question on the probably on the cash flow side is because of that strong order book. Obviously, they have to invest into the working capital as well. So that's the reason why you are seeing this. But as these orders start getting executed, you will see the cash flows coming through, and then the cash flows will catch up with the EBITDA numbers.
Understood. And on the current order book that we have, so if I were to look at the bid book, it is coming down, and the order book also sequentially it has come down. I wanted to understand on the US side of business, are we expecting any large order in the Permian Basin to be booked?
So, see, our US order book at the end of December stood at almost 206,000 tons, which will take care of our H1 for the calendar 2024. Then for the second half of calendar 2024, there are a couple of opportunities. And we expect that these will get concluded in a phased manner over the next few months. So we are very confident that we will secure the business continuity in US.
But those won't be reflecting in the bid now. Is that the right understanding?
Yes.
Okay, got it.
But let me say that the US business outlook is extremely positive because of the drilling activity in the Permian Basin and the gas that needs to be evacuated from Permian Basin to the Gulf Coast ports, from where the US is exporting LNG to all over the world, largely to their Western European allies as well. So for US, they have attained the peak position when it comes to the global LNG market. And obviously, US is not going to surrender this position. So for us, as a line pipe manufacturing company, we see that there will be more than a couple of new gas pipelines that will be coming up, and we are the largest line pipe manufacturing company in the US. So we will obviously get our fair share of the market as and when these orders are awarded.
Understood. And the last question,
excuse me, sorry sir to interrupt. May I just request you to follow up the queue as several participants are waiting, please.
Sure.
Before we move to the next question, a reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Yes, sir. Just from your opening comments, for the Saudi market, if you could give, what kind of opportunity in tons that you see in the line pipe over the next 5-6 years, considering the water and the historical oil related spends that they do, and what was the line pipe annual market for Saudi?
Sure. So the Saudi market is, in one word, if you were to say it, it is really looking phenomenal. Both for line pipes, we have water applications as well as the oil and gas applications.
Yes.
So EPIC, our associate company, has an order book which goes beyond 2 years, and that's a very strong position. And not only this, but the outlook also continues to remain very bullish over there, with their water department ministries announcing a huge focus on their Vision 2030 and investing heavily in improving the water infrastructure. So the Ministry of Environment, Water and Agriculture, they recently announced an allocation of $80 billion towards water projects within the coming years. And they are expecting 90% of water demand to be met through desalinated water by 2030. So all this is appearing very positive to us, and it's getting mirrored in the order book that EPIC is carrying also. Just to add, some time back, EPIC got a 1 billion Riyal order from SWCC. That's for the water pipelines. So in a nutshell, it's a very positive outlook in Saudi for our associate company.
Okay. Can I conclude one thing here, that water was not a large demand generator until, let's say, 2-3 years back, and now, because oil and gas infra spends have been continuous for them, right? Is that a conclusion which we can take, or?
No, that is not the correct conclusion. So, if you see over a longer period of time, let's say about 6-7 years, then probably in Saudi, the water and oil and gas demand gets almost equal. But each year is different. So I can tell you in the last 3 years in Saudi, we have been able to get more orders on the water side. If you were to go back prior to 3 years, then we had some very large orders on oil and gas side. So, but by and large, you can say that the market is equally divided between water as well as oil and gas. And as far as our Epic's order book is concerned, we have a healthy mix of both.
Okay. Will the market be significantly bigger than what you have experienced? Annual market size will be significantly bigger than what you have experienced all these years in your Saudi business, considering Saudi's higher focus on water spend?
So Saudi is clearly having their Vision 2030 when they are doing these capital allocations and these budgetary announcements. And it will continue to remain as a very growth-oriented market. So we are very positive about it, no doubt.
Okay. And my last question is on the India market. What will be the India line pipe market volume growth rate over the next 3-4 years in your opinion?
So in the India line pipe, we broadly have 3 categories. We have the domestic oil and gas, then we have the domestic water, and then we have the exports. In different years, the mix of these 3 obviously keeps changing, depending on the type of projects that come on the table. We see as of now a very good potential for more export orders. So that is where the margins are also very high, and it helps the P&L in a substantial way. In the domestic oil and gas, also there are a few projects that are coming up, but more so on the CGD front. So on the city gas distribution, we see that the demand will remain robust. That's for the ERW pipes. And we will continue to get our fair share of the market here. In the domestic water as well, there's a lot of focus on irrigation and pipelines, and state governments are also really increasing their spend, supported by the central governments. So there also we see a very good traction on the domestic water side. So all the 3 aspects in the India line pipe business are looking positive to us.
Okay. In this, can I conclude one thing, that in India, the water and the oil and gas is where it must have been extremely slower volume growth incrementally. A lot of the India growth will be turbocharged by the export volumes?
No, it's not like that. I think all the 3 are contributing to the growth. But exports are obviously better at the margin side.
Okay. Thank you very much, and all the best to you, sir.
Thank you.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good morning, sir.
Yeah, hi Vikas.
Hi, sir. So just wanted to understand this quarter's EBITDA per ton drop. While we have done much bigger volume in India, still the EBITDA per ton got dropped. So is anything specific in the number which has led to this decline despite better volumes?
See, because now India EBITDA per ton, that number is not really visible from the published results. And I'll tell you why. The India standalone results that you are seeing are including even Welspun Metallic Limited now, because now the legal merger has been completed. So Welspun Metallic is where we have the hot metal production and also the pig sale. So hot metal goes into the DI pipe manufacturing. So because of this, you cannot really calculate the EBITDA per ton for the line pipe business of India. But let me tell you the answer to your question. In India, we typically do anything between 5.5 lakh tons to 6.5, 7 lakh tons per annum in the total line pipe volume. And the average EBITDA per ton works out to close to 10,000 rupees a ton. So obviously, each year is not identical, but By and large, this is the set of numbers. So, like if it's a 6 lakh ton volume in India, then that would translate to about 600 crores of EBITDA. This, of course, comprises of the exports business, then domestic water, and domestic oil and gas. And we are pretty much on the similar lines, Vikas, even in the current year.
Understood, sir. So my second question pertains to our order book, basically, especially in India, since probably we are entering in the election season, and at the same time, 4Q is the best execution period as well. So do we see that we would face a little bit challenges in 1Q FY25 or 2Q FY25 because now order book addition could temporarily drop down because new order would not be coming while our execution rate would be very strong?
No, because we don't see any of those type of issues. So our order book is, as we said, 575,000 tons as of now. You can say Little Rock, US is about 200,000 odd, and the balance is in India. And we continue to add more orders to this as well. So, and this anyway gives us visibility easily for the next 6 months or so.
Understood, sir. And just last question regarding our capital allocation. So, given that we have continuously announcing new capex, including the MOU signed on the Syntex side, so what is the total capex we are expected to spend in FY25, and how does our debt movement would look like?
No, I'm very glad, Vikas, that you asked this question, because we wanted to talk on this anyways. See, the capexes that we have already announced as of now, they are approximately adding up to about 1,800 crores. And these are already in the public domain. These will be spread over at least 2 fiscal years, or 2.5 fiscal years. So it's not like we are doing all the capexes immediately. By and large, the capexes are focused on 2 areas. One is clearly Syntex. And our game plan for Syntex is a very large strategic vision for it. We had announced a capex of 800 crores for Syntex Telangana some time back. And our strategy is to enter into a plastic pipes business using the Syntex as a gateway. And we are looking at as a pan-India presence. So we are not only looking at Telangana, but we are looking at multiple locations across India where we will be evaluating setting up manufacturing facilities. So that's one area where you will see capital investments going in plastic pipes and Syntex. The second area where our investment focus will remain is DI. So we believe that ductile iron pipes is one of the sunrise industries, and in India also, and even in the Middle East region. So we have announced capex in India for expanding our DI capacity at Anjar.
Ladies and gentlemen, management line has been disconnected. Please stay connected. I'm connecting them. management line has been connected. Please go ahead, sir.
Okay. Vikas, you are there?
Yeah, I'm there, sir.
Okay. So we are answering your capital allocation question. So we spoke about Syntex.
Yeah, you were on the DI side and then suddenly you got dropped.
DI side also, we have announced capex of 300 crores for expanding our DI capacities at Anjar. And we also announced about the Middle East region yesterday for about 500 crores. So that also adds up to about 800 crores. So you can say roughly 800 in DI and 800 on Syntex and plastic pipes. So we are looking at about 1600 crores plus maintenance capex of about 150. So close to about 1800 spread over 2 to 3 years. That's our plan. And with the strong free cash flows that our businesses are generating, we don't see this funding of this as any issue.
Understood, sir. And so just lastly on the ABG shipyard,
Sorry to interrupt, sir. As several participants are waiting in the queue, please follow back questions if required. Yes, thank you so much. The next question is from the line of Bhavik Shah from MK Ventures. Please go ahead.
Yeah, hi sir. Am I audible?
Hey, Bhavik. Yes, we can hear you. Go ahead.
So my question was on ABG shipyard. So just wanted to understand, we invested around 650 to 700 crores there. What kind of money we have made from the scrap sales till now, and what kind of money is still pending to be received from the sales, and what are we thinking there? Like, what is our plan of action there?
Sure. Bhavik, as we have said in the past as well, our first priority is to monetize these assets. So we have come close to 60%. 60% of this has already been liquidated. We have monetized this as well. Balance also, we'll be able to do it in the next 3-4 months.
Okay, so can you quantify the amount? How much is what's the amount we have got till now, and what's the amount we are expecting to be received?
As I said, it's about 60% plus has been already done, and the balance will be done in the next 3-4 months. And at the end of it, we would be able to collect more than what we had invested. So it is a positive to the bottom line.
Okay. And so do we have any other assets over there, like land bank or anything which we are planning to sell there?
So what I was telling you was for the other metal assets which were there and we are liquidating. But of course, there is the land bank there is the infrastructure there. So all those assets, in a way, become free of cost on our balance sheet, because we would have already monetized whatever we had invested by just liquidating the metal scraps. So that removes any load on our balance sheet completely. And we will decide what to do with these land bank and these assets. So we are looking at multiple options. As of now, we don't have any plans to announce. But be rest assured that there is no weight coming on the balance sheet, because the complete investment will be monetized.
Right, sir, right. And so just on the Syntex front, like what is the plan? Like, can you just elaborate a little bit over there? Like, when are you planning to enter the market or anything?
So we already announced about the Telangana project, and it's going to be now pan-India presence. There will be other locations also getting added. We will, of course, ration out our capex in a very judicious manner, and we'll be entering the plastic pipes market in the near foreseeable future.
Okay, so like any plans to like what are the timelines? Any timelines in like place?
So these are obviously greenfield expansions. So they will take at least 12 to 18 months horizon to get into the market.
Okay, sir. Okay. Thank you so much and all the best.
Yeah.
Thank you. The next question is from the line of Bahabin from EM Holdings. Please go ahead.
Good morning, sir. Bhavin here from EM Holdings. Congrats and overall good set of numbers and continuous ramp up in new businesses like DI pipes and Syntex and all that. A few questions. First on the DI pipes Middle East project, a 500 crores project for 150,000 tons. So will this be backed by blast furnace for pig iron, or you are just putting up a DI pipe plant there?
So Bhavik, see, As of now, what we have announced, this amount that you are seeing, it's a approval taken from the board, okay, for further exploration. We are actually having two options that we are looking at and simultaneously working on them. But to answer your question specifically, it's not the blast furnace route, it's basically the DI. Of course, we'll get fine-tuned later on and we'll come out with...
You will be procuring steel from open market.
Yeah.
Right. Second on, again, the slide number 42 where you have given targets for FY26. So, DI pipes, I assume 450,000 is just assuming Indian volumes and Middle East is not considered there?
Correct. That's India. So, as you know, we had capacity of 4 lakh tons in DI and we are adding 1 lakh ton with this Anjar expansion. So, capacity becomes 5 lakh tons.
Right. And line pipes volume includes Saudi volumes or these are excluding Saudi volumes?
No, I think, we are talking about India and US.
India and US only in that slide. Okay. And last question on, I missed out on the US plant current order book.
So US plant order book is at about 200,000 odd at the end of December. And this will take care of H1 for calendar 2024. Then for the second half of the calendar 2024, there are a couple of strong opportunities. And expecting that these will also get concluded in a phased manner. So, we are very
2 lakh dispatches would be including quarter 4 and first half of next year, so over 3 quarters.
We are talking of the H1 calendar 2024.
The H1 calendar 2024, so next 2 quarters. Okay. And these are largely spiral orders or 2 lakh includes some ERW orders also?
Both put together.
And already, I think your bid book is strong, so you are confident that you will be able to get orders which will take care of second half.
Yes, we'll secure the business continuity.
Last one on the DI pipe order book, which looks very strong, and we have seen other players also which are reporting very strong numbers and strong order book. So I'm assuming this 264,000 order book is for next 2 to 3 quarters it will get executed?
Yeah, potentially yes. See, it is not the demand which is a constraining factor. So demand is very robust, and if we want, we can increase our order book even today as we speak.
Right.
We are being cautious as our production is getting ramped up, and that ramp up is now clearly visible in the numbers. So the efficiency is improving, the quality is improving, the rejection rates are coming down. So
backed up on coking coal on this because you have a blast furnace for Indian facility. So how is the coal tie-up done or procured?
So these are all commodity and we purchase it from the suppliers. So these are market prices.
So normally we have 1 month inventory or we keep large inventory there?
We generally, the market practice is 3 months inventory.
3 months inventory. Yeah. Okay. Thanks a lot.
Thank you. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Thank you for the follow-up opportunity. So more or less my questions have been answered. Just wanted one more understanding on the Noyan shipyard side, if we've planned anything for that asset, going ahead, any business that we've planned?
No, Viraj. We are evaluating various options, but as of now, nothing has been planned.
Understood. Okay. Thank you and all the best for the future, sir.
Thank you.
Thank you. The next question is from the line of Pranay Gandhi from Green Portfolio. Please go ahead.
Hi, good morning, sir. So, on a very general terms, I wanted to understand that considering the fact that the order book for EPIC is already booked for next 2 years, so are we looking at some sort of expansion? The underlying reason for this question is that generally, even if we get a new order, it would be served beyond 2 years. and there will certainly be clients who would want the order to be delivered sooner. And in a way, we are losing out on those orders. So how do you see that side of the business?
See, Saudi is that way a very mature market, and the key customers, like whether it is Aramco or whether it is SWCC, when they come out with projects and they put them out for bid and invite the quotations, they also look at the capacities which are existing in the kingdom. And then they come out with those projects in a very judicious, timed manner. And these are all long-term projects. So some of them go over 2-3 years as well. So it's not a market which gets overly crowded, like suddenly a spate of projects will come up and capacity will not be there. It doesn't happen like that because of the maturity of the market and the maturity of the customers.
Fair enough. And so since we are already on the track of exceeding the revenue target for this year, how do you see business shaping up, say, in next 2 to 3 years in terms of the volumes or the revenue?
So I think over the next 2 to 3 years, we see our line pipe business holding steady and continuing to grow. India, US, and Saudi. We see exponential growth coming from our new businesses. So that is the DI pipes, then also the stainless steel, Syntex. These will be the future engines of growth for Welspun Corp.
Okay, and sir, could you please put a number to it, if possible?
So I think our investor presentation already gives you that. I think there is a slide which gives you visibility, rather projections, till FY26. So if you look at that, the line pipes is showing projected at about 1.2 billion. Sorry, 1.2 million for FY26. DI is projected at about 4.5 lakh tons for FY26. Stainless steel pipes is projected at about 8,000 tons for FY26, and stainless steel bars at about 65,000 tons for FY26. So I think we have put out a broad vision for the next 2 years. We don't have a specific guidance to give you as of now, but clearly growth is a way of life at Welspun Corp, and you will continue to see the company growing.
Perfect. And thank you so much, sir.
Thank you so much. The next question is from the line of Nafis Al-Abbas from Ajeez Capital. Please go ahead.
Thank you, gentlemen, for the call. My question basically was just answered by the previous caller. What we really wanted was a ballpark figure for the utilization at your Saudi entity or associate, just to understand their capacity for winning projects on the short term. I mean, are they in the high 90%, let's say 70, 60? Just a rough number, just for us to understand. Thank you.
Okay. So your question is for capacity utilization at the Saudi associate?
Yes, but just a ballpark number if you don't want to give the figure. Just to know, let's say they are in the 50s or the high utilization, just to understand.
Yeah. Now that they have an order book going beyond 2 years, obviously they'll be in a very good capacity utilization number.
Perfect. Thank you very much.
Yeah.
Thank you. The next question is from the line of Radha. Please go ahead.
Sir, thank you for the opportunity. Sir, in the PVC pipes that we are looking to expand, we wanted to understand whether we are looking to supply more to the agri segment or the non-agri.
Both the segments will be addressed. So the entire market for the plastic pipes, and we are looking at OPVC, we are looking at UPVC, HDPE, the complete gamut of plastic pipes is our target. And it will be a pan-India presence. So we'll be not just Telangana, but we'll be setting up operations at a few more locations as well. And the objective is to really enter the market in a impactful, significant manner.
Okay. And secondly, this Syntex water tank business. So could you tell us when can we see significant pickup in the utilizations in the water tank business?
So the water storage tanks business, which is the traditional business of Syntex, it has also been doing well. They have been showing growth as well there. And along with the plastic pipes capacities that we'll be putting up at pan-India locations, we will be obviously putting up WST capacities as well. So there are a lot of benefits when you can combine water storage tanks as well as plastic pipes together in terms of logistics and shipping costs and all. So both the areas of WST as well as plastic pipes will be growth areas for Syntex.
Okay, thanks, sir. So lastly, given that we are expanding in the Middle East region for the DI, so you mentioned that demand is very strong and this $80 billion opportunity is coming up. So could you tell us what is the total size of demand that will be generated for the DI pipes in India and what that will be in addition to the current demand scenario in the Middle East region?
So the DI market in the Middle East region is growing rapidly, and we see that the current local players who are there, they are not able to cope up with the quality and the output that the demand is requiring. So it's actually quite a few imports coming into that region from other countries. So we see that by setting up a DI facility inside the Middle East, we will be able to at least immediately replace the imports and able to get a quick market share. And since there is growth there, we'll be able to scale up our operations also rapidly.
So who are all the local players you're talking about?
There are quite a few local players there in different, there are 3-4 large markets inside Middle East region. So those are mostly domestic as well.
So the customers that we'll be targeting for DI, will it be similar to the ESCO customer? And will this benefit for us in terms of approval cycle, given that the customer profile could be similar?
See, the East Pipes company is a completely separate business of line pipes, and the DI pipes that we are talking of, Welspun Corp on its own, is also completely separate. So we don't see them really mixing anything with them. There might be some synergies in terms of customers, which of course we will leverage on those synergies. But otherwise, the DI pipes business will be completely different venture from the existing East Pipes company in KSA.
Okay, thanks and all the best.
Thank you. The next question is from the line of Dinesh Kulkarni from RDST. Please go ahead.
Hello, sir. Can you hear me?
Yeah, Dinesh, go ahead.
Yeah. First of all, very congratulations on a good set of numbers. I have a question on this DI pipes in the Middle East. Can you just explain the market here? Like, how big is the market and where do you see it's going the next 3, 4, 5 years, and what could be a targeted market share you are looking at?
See, the water infrastructure market is quite strong, not only in KSA but in the Middle East region also.
Yeah.
If you talk specifically of KSA, just as an example, then the Vision 2030 also has been investing heavily on improving the water infrastructure. And we already spoke about the Ministry of Environment, Water, Agriculture, which announced allocation of $80 billion recently. So I think all these are very strong signals that are coming up in terms of the water business. DI pipes as well as for line pipes. Line pipes getting catered by East Pipes company as well as the new DI business which we will set up somewhere in the Middle East through our own wholly owned subsidiary.
Yeah, and do you need any debt on this further, or this is enough for the time being, is what you expect?
Sorry, do you need any?
You need to raise any other capital, equity or debt capital apart from this 500 crores which you are investing right now?
No, I think this 500 crore includes debt and equity both. So this is the project cost.
Okay. And what kind of an asset turn you are looking at in the next 3 years?
Excuse me, sorry to interrupt, sir. We request you that return to the question queue for follow-up questions.
Okay. Thank you.
Thank you so much.
Yep.
The next question is from the line of Asif from DAM Capital. Please go ahead.
Yeah, just one clarification. The capex number that you talked about, 1,800 crores, for Syntex it was 800 crores. Can you just elaborate more what that 800 crores will be spent on? Some breakup within that?
Sure. So that 800 was announced some time ago, which was for the plastic pipes in Telangana. Now we are looking at in a different way. We are looking at setting up a pan-India plan. So there will be multiple locations, not just Telangana. Telangana will be one of them. And cumulatively speaking, we will be spending an amount close to this, but not just Telangana. It will be spread over and into different products, all plastic pipes. So whether it is UPVC, whether it is OPVC, all inclusive.
So at least 4 or 5 plants, you will be spending 800 crores in total.
Yeah, you may say that. Pan-India.
Okay, sure. Thank you.
Yeah.
Thank you. Ladies and gentlemen, due to time constraint, we take this as the last question. As that was the last question, I now hand the conference over to Ms. Shailesh Raja from Batlivala and Karani Security Limited for closing remarks.
Yeah, thank you all for attending this session. We especially thank the Welspun Corp team for their time. Caesar, would you like to make any closing comments?
I think thank you for arranging this call, and thanks to all the participants for attending as well. And I hope we have answered all the questions. If you have any further query, please feel free to contact Gautam or Salil, and we'll be really happy to assist you in this regard. So wish all of you to have a great day ahead. Thank you.
Yeah. Thank you, sir.
Thank you. On behalf of B&K Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.